So, you're running your business out of South Africa and you're aware of the corporate income tax, which is sitting at 27%. You've probably complained about the high income tax rates in South Africa, especially for small businesses just like yours. What if I told you that there's a way that your business could pay significantly less tax, even starting at 0%? Well, that's where Small Business Corporation Tax Relief comes in, or SBC. It's one of the most valuable tax reliefs that SARS offers to entrepreneurs in South Africa. But it comes with strict rules. In this video, I'm going to uncover what SBC is. I'm going to show you the huge benefit of the lower rates, who qualifies for it, and how it's going to work in practice. Let's get started. Firstly, SBC is not a totally different tax. It's a different tax rate structure from the normal 27%. So for small businesses that qualify, they fall under this tax structure that replaces the 27% flat rate for corporates. So let's walk through the income tax rates for small business corporations that do qualify. If your business makes profits up to 95,750, you do not pay any tax at all. That's 0%. Once you make above 95,750, up to 365,000 Rand, the tax rate is going to be 7% of just the amount above 95,750. Then the amount above 365,000 but below 550,000, the tax rate is 21%. And if you make profits of above 550,000, the tax rate there will be 27%. Remember, if you make above 550,000, you do not pay 27% flat rate. You're going to be paying the first portion of 95,750 is 0%. Then the next portion up to 365,000 Rand is at 7%. Then the next portion up to 550,000 is at 21%. Then the amount above 550,000 is at 27%. So let's just walk through some examples of profits for your business. So if a business makes 100,000 Rand in profit and qualifies for SBC, the taxes on that will be 267 Rand and 40 cents. So that's actually a saving of 26,000 Rand. Because under the flat structure of corporate income tax, you would have paid 27,000. If your business makes 300,000 Rand in profits, the corporate income tax rate is 27%, which means your taxes due are 81,000 Rand. But under SBC, you would only need to pay 14,267 Rand and 40 cents. So that gives you a saving, tax relief of 66,000 Rand. If your business makes 500,000 and qualifies for SBC, it would pay 47,000 Rand in tax instead of 135,000. So that means you would save 87,000 Rand in taxes. If your business makes 750,000 Rand in profit, it would pay 111,000 in SBC tax, thus saving you 90,000 Rand. If you make 1 million Rand in profit and qualify for SBC tax, your taxes under SBC would be 179,000 and you would make a saving of 90,983 Rand. So remember, these rates are for the 2025 financial year. For companies that have a financial year end that ends on or before 31 March 2025. That sounds fantastic, right? Well, here's the catch. The qualification criteria are quite strict, and your business must meet this criteria for the entire tax year. So if you meet this for part of the year or most of the year, you still won't qualify. Let's go through the qualification criteria. starting with the legal structure. You must be registered as a private company, Pty Ltd, or a closed corporation, CC. Your income limit is 20 million Rand. So your company's total gross revenue before expenses for the financial year cannot be more than 20 million Rand. If you go over by 1 Rand, you do not qualify. Shareholders. All shareholders for this company or the members for this closed corporation must be natural persons, real human beings. You cannot have trusts or other companies as shareholders of this business, and that should apply for the entire year. Second, all these shareholders cannot hold shares in any other private company or closed corporation. The exception here is shares in listed stock or units in a collective investment scheme like unit trusts and exchange traded funds. Business activities. So the main point here is that your business needs to be primarily trading actively, not passively. So the limit here is that you cannot have more than 20% of your company's income be coming from things like interest, dividends, capital gains, etc., or rental income, right? If less than 20% of your business's income comes from these passive investments, then you would qualify. But if you're more than 20%, you would be disqualified. The second one is your company cannot be classified as a personal service provider. What does this mean? Well, SARS defines this as it's being disguised employment. Generally, your company might be seen as a personal service provider and disqualified from SBC if the service your company offers is rendered personally by a shareholder or someone related to them. So if you're running your business, you as a shareholder are conducting the service, or your spouse or someone related to you is running the service, and you're the only people running that service at the business, you could be seen as a personal service provider. And also there's a test around if more than 80% of your income comes from one client for services rendered by you or your connected persons or someone related to you, then that would be seen as a personal service provider. So basically your company shouldn't primarily exist to provide personal services of the shareholder in a way that looks similar to employment. So those are the qualification criteria. So how do you claim SBC tax status? The good news is there's no formal application process for you to qualify. You do it through a self-assessment. What this means is your accountant needs to assess your business and see if you qualify for SBC tax in the financial year in question. They will then do the calculation of the SBC tax rates when they're submitting your income tax returns, the ITR 14, as well as when they do the provisional tax payments, IRP 6, during the year. So it's important that you keep accurate records such as your shareholders' agreements, your share certificates, share registers, and other documents to make sure that you have this proof, because SARS will then do a review once you've submitted your income tax return claiming your SBC tax status. If you think your business does qualify for SBC tax and you're not sure, feel free to reach out for a free consultation where we can look at your business and see if your business does qualify, and I can walk you through the criteria and what your business specifically needs. You can find the information in the description below, and you can book a free consultation with me. So let's recap. SBC is not a separate tax. It's a different tax rate structure offered to small businesses that qualify. How do you qualify? There's strict criteria related to your income of 20 million or less, your shareholding of natural persons only with no shares in other companies, and the business activities where you're not a personal service provider. To submit your claim, all you need to do is submit your income tax return for your normal corporate income tax, and in there you claim or you submit a self-assessment saying you qualify for SBC, SARS will do a review of this. It's important that you are accurate in your assessment, because if SARS disqualifies you from SBC, you may end up with a larger tax bill where you're required to pay the 27% and make up the shortfall, and in addition, some penalties and interest on that. So it's important that you get this accurate. If you enjoyed this video and found value in it, please like it and subscribe to the channel so entrepreneurs and business owners just like you can find this content. I'll see you guys in the next one.